I actually had this experience the other day that I think perfectly frames what we're talking about today. I was physically walking through a mall.
Oh, wow. An actual mall in 2026.
Right. It feels like an archaeological expedition at this point. But I was walking there and I saw this pair of jeans in a window. And the sign right above them said price, $150.
Which is, I mean, that's pretty steep for denim.
Extremely steep.
Yeah.
But right next to it, in this super aggressive neon red font, was a sticker that said, today only, 40% off F. And my brain, my logical, rational brain knows that the jeans probably cost, I don't know, $12 to make in a factory somewhere. I know the markup is just insane. But my lizard brain,
It lit up.
it lit up like a Christmas tree. I didn't see spend money. I saw win a prize.
Yeah, that's the dopamine hit right there. It's basically the oldest trick in the retail playbook. You aren't actually buying the pants at that point. You're buying the feeling of beating the system.
Exactly. I walked out of there feeling like a total financial genius because I, quote unquote, saved $60. But on the drive home, it sort of hit me. Was the price ever really $150? Or was that just a fictional number? Like an anchor designed specifically to make the real price look like a gift?
In traditional retail, it's almost always an anchor. It sets the context so the transaction just feels like a massive victory for you.
Well, today we are going to take that exact skepticism and apply it to a market that is infinitely more complex and right now much more volatile than the denim industry. We are looking at the cannabis market of 2026.
Which is just wild right now.
Because if you think buying clothes involves psychological warfare, wait until you see what's happening with your local dispensary's pricing strategy.
It is a fascinating case study. I mean, it's basically a masterclass in behavioral economics playing out in real time.
So for this deep dive, we are digging into the CannabisDealsUS Cannabis Price Index. This is a massive data set put together by Theo Valmis and his team. And the mission for us today is pretty simple. We are going to look past the sticker price, the menu price, to try and understand the actual real health of this industry. Because according to Valmis, things are absolutely not what they seem.
No, they really aren't. And I love this source material because for a very long time, cannabis data was just a total black hole.
Right. It was all over the place.
Exactly. You had thousands of independent retailers, completely different state laws, tax structures that frankly made no sense. It was fragmented chaos. Trying to get a reliable read on the average price of the product across the board was basically impossible.
So what did Valmis actually do here to fix that? Because data collection in this space is notoriously hard.
He effectively built a high-fidelity radar system. So he's not just calling up a few shops and asking how business is going this quarter. His team at Cannabis Deals US is aggregating and normalizing pricing data from online menus across the entire country.
They're scraping the actual digital storefronts.
Yeah, exactly. They're scraping the data to see what's listed, what's discounted, and by exactly how much. He's shining a giant flashlight into the dark corners of the market to reveal well, he calls it the structural pressure hidden underneath.
And that leads us to the central mystery we're unpacking today. Because if you just glance at the menus, if you look at what Valmis calls the list prices, the market looks incredibly stable. It looks boring even.
Really flat.
Right, prices seem flat. But Valmis says that's an illusion. Under the surface, the market is paddling furiously just to stay afloat.
It's the classic duck analogy. Calm on top, absolute chaos underneath the water.
So let's crack this open. The report introduces two key terms that we really need to get straight immediately because the whole analysis sort of hinges on them. List price and effective price. Can you walk us through the difference there and why the gap between them is widening so much?
Sure. So list price is what you see printed on the jar, the bag, or the digital menu before you click anything or apply any codes. It's the MSRP. And according to the index, list prices in 2026 are remarkably stubborn. They're barely moving at all.
Okay.
If you looked at a specific strain of flower 3 months ago, the sticker probably said $50. Today, it still says $50.
So on paper, if you're just looking at the history of that sticker, inflation hasn't hit, but deflation hasn't hit either. It's just completely flat.
Right. But then you have the effective price. Now, this is the actual amount of money leaving your wallet at the exact moment of transaction. It's the price after the promo code, after the daily deal, or the loyalty reward. And this number, the effective price, is declining significantly.
So I'm paying less, even though the tag on the shelf literally hasn't changed.
Precisely.
Yeah.
The wedge that is driving those two numbers apart is aggressive, highly strategic discounting. The retailer is keeping the sign at $50 to maintain appearances, but at the register, you're really only paying $35.
Okay, I have to play devil's advocate here for a second because this feels highly inefficient. If I'm a retailer And I know the actual market value of this product right now is $35, and I know I'm going to end up selling it for $35. Why do the dance?
Yeah.
Why not just cross out the $50, write $35 permanently, and be the honest, low-price guy in town? Why play these games with the consumer?
That is the million-dollar question. And the answer, according to Valmes's analysis, is fear. Specifically, the fear of price anchoring and resetting customer expectations.
Let's break that down. Anchoring is setting the baseline expectation in someone's mind, right?
Exactly. Permanence is extremely dangerous for a retailer. Think about it this way. If you permanently lower that list price to $35, you have officially reset the customer's expectation. You've told the market this is what this product is now worth.
And you can't easily go back.
You really can't.
Yeah.
Once you lower that bar, it is excruciatingly difficult to raise it back up without making your customers feel totally ripped off.
I see. So if I get used to buying my favorite gummies for $20 as the standard everyday price, and then next month you try to charge me $30 again, maybe because your supply costs went up or the market shifted, I'm not going to think, oh, normal market fluctuations. I'm going to think, you greedy jerk.
Exactly. You feel cheated. You feel like the store is gouging you. But if the price on the wall stays at $30 and I give you a limited time discount to $20,
I feel like a genius again. Like with the jeans.
you feel like you got a deal, you feel smart. And crucially for the business, I haven't destroyed the perceived value of the brand long term. I can take that discount away next week, and the quote-unquote real price is still $30.
So it's about protecting the brand's ego in a way, or I guess protecting the future option to charge more when things improve.
It's about strategic flexibility. That's the key phrase Valmes uses in the report. Discounts allow these retailers to react to short-term problems, like maybe they have way too much inventory sitting in their back, or maybe the guy across the street is running a massive promo without committing to a long-term margin compression.
Margin compression, that's the fancy economist way of saying making less money forever.
Basically, yes. Think of it this way. A discount is a fling, but a permanent price cut is a marriage. And the data clearly shows that cannabis retailers in 2026 are terrified of commitment. They want the option to go back to the high price if the market tightens up.
Okay, so we've established why they do it. It's a survival tactic that keeps their options open, but let's look at how they do it, because when I hear phrases like market under pressure and aggressive discounting, my brain immediately goes to a going out of business sale.
Right, everything must go.
Yeah. I'm imagining red tags on every single item in the entire store, but looking at the Cannabis Deals US Index, that is not what's happening at all, is it?
No, and this was actually the most surprising data point for me in this entire deep dive. You would expect that if effective prices are dropping across the board, everything in the store must be on sale. But the actual frequency of discounts is shockingly low.
Walk us through the numbers there. What did the index actually find?
So in any given week, only about 2 to 4% of all tracked products are actually discounted.
Wait, 2 to 4%, that's nothing. If I walk into a regular grocery store, half the cereal aisle is on sale at any given time. 2% is like looking for a needle in a haystack.
It is a tiny slice of the inventory. It's incredibly targeted. But here is the kicker. When they do discount those specific items, they go incredibly hard. We aren't talking about 5% off for locals or 10% off on a Tuesday.
Right.
The reductions Valmes is tracking are typically between 30 and 55%.
Whoa. Okay, so they aren't discounting often, but when they finally pull the trigger, they are practically giving it away. 50% off is a serious, serious cut for any retailer.
It is a massive cut. It essentially wipes out the profit margins entirely. And what that tells us is that this discounting is surgical. It's not a desperate attempt to dump the entire store's stock because they're going under. It's a precision tool used to manage sales velocity.
Sales velocity. I love that term. It makes it sound like physics, you know? Like
Right.
we're calculating the trajectory of a rocket or something.
It's really just retail speak for how fast is this stuff leaving the physical shelf. And in the cannabis industry, this is extremely critical because, unlike a pair of jeans or a toaster, a lot of this product has a literal clock ticking on it.
Freshness matters.
Huge factor. So imagine a store manager looks at their data for the week. They see they have 50 jars of Blue Dream that were harvested, say, 5 months ago. The sales are slowing down. It's taking up valuable vault space. And worst of all, it's drying out.
Nobody wants dusty, dry flour.
Right. So they don't put the whole store on sale. They put just that specific strain on a 40% discount. Boom, it moves. Velocity spikes. Cash creates flow. And the rest of the store's inventory stays perfectly at full price.
So for you listening, this is a major key takeaway. If you're browsing a dispensary site and thinking, wow, prices are super stable, nothing has really changed, you might be completely missing the action. Because of these deep surgical strikes happening in that tiny 2 to 4% window, there is a persistent downward pull on the average price people are actually paying.
Exactly. It's like a stealth price drop. The average effective price of the whole market is trending down, even if 96% of the products haven't changed their sticker price at all. It's a very sophisticated way to manage a glut of product.
Now, you mentioned freshness just a second ago, and that perfectly brings us to the next big chunk of this report. Because we've been talking about cannabis as one big monolithic bucket, but the index makes a massive distinction between two different categories. We've got a bit of a civil war going on between hardware and consumables.
This is a crucial distinction. If you just look at quote-unquote cannabis prices as a single thing, you completely miss the real story. You absolutely have to separate the durable goods from the perishables.
So on one side, we have the hardware. This is your vaporizer batteries, the dab rigs, the glass accessories, the gadgets.
Correct. And the data shows remarkable stability in this sector. The prices for vapes and batteries simply aren't bouncing around. They're acting as the anchor of the industry right now.
Which makes total sense when you really think about it. I mean, a lithium-ion battery doesn't get stale. It doesn't lose its potency if it sits in a warehouse for 3 months.
It doesn't rot. It has a very predictable supply chain, usually coming from major manufacturing hubs overseas. It's a standard retail good, just like a toaster or a pair of headphones. It can sit on a shelf for 6 months, and it's still functionally worth the exact same amount.
Right. Buying a battery is just buying consumer electronics.
Exactly. Plus, and this is a really important point, it faces significantly less regulatory uncertainty compared to the actual plant material.
That makes sense. But then you compare that to the consumables, the flour, the oils, the edibles. This sounds like where all the chaos actually lives.
It's the Wild West.
This is where we see that inventory turnover pressure we talked about earlier. Flour dries out. Terpenes degrade over time. Edibles literally expire.
It's the difference between selling iPhones and selling avocados.
Oh, that is a perfect analogy. Apple doesn't have to put the new iPhone on 50% clearance just because it's going to turn brown and mushy next Tuesday.
But the local grocery store absolutely has to move those avocados before they turn into mush and become a total loss. And that is exactly what is happening with cannabis flower in these dispensaries.
So the extreme volatility, those 55% price slashes we were marveling at, that's almost entirely happening in the consumable aisle.
Almost exclusively. The competitive intensity there is extreme right now because every single grower and retailer is racing against the clock. If you're a consumer, here is your real aha moment from the data. Don't go in expecting a massive fire sale on a high-end vaporizer. The margins there are tight, and the product is shelf-stable. But if you're looking for flour and you're willing to be a little patient, that 40% surgical discount is very likely just around the corner.
You just have to hunt for it. You have to be the sniper looking for that 2% window on the menu.
Exactly. You just have to consistently watch the menu.
Okay, let's zoom out to the macro level for a minute here. We've got stable list prices that are actually kind of fake. We've got falling effective prices, deep surgical discounts to move aging avocados, and a totally split market between the gadgets and the greens. The big question, and I think the one Valmes really tries to answer in his analysis here, is this. Is this actually bad?
It certainly feels bad, doesn't it? When you hear about 50% discounts, it immediately sounds like a crisis.
It really does. If I
Yeah.
hear a standard business has to slash their prices by 50% just to make a sale, my brain goes to desperation. I think crash. So is the cannabis industry actually in trouble here?
That is definitely the prevailing fear. But the expert analysis here, and the thing Valmes is really emphasizing with the data, is that this is not a collapse. It is a very clear sign of a maturing market. It's growing pains.
Maturing. That's a very polite economic word for painful.
It is deeply painful for the individual businesses, absolutely. Their profit margins are getting squeezed hard. But economically speaking, it's completely necessary. It basically comes down to basic supply and demand. The macro reality derived from the source is clear. Supply in 2026 is expanding much faster than demand.
There's simply too much weed.
There's an abundance. We have greatly improved farming techniques. We have more states coming online legally. We have better yields per square foot. We have a glut. And in a healthy, truly competitive market, when you have mass abundance, what should happen to
They
prices?
should go down. That's just economics 101.
Exactly.
Yeah.
If we had a massive surplus of product in the country, but prices somehow stayed artificially high, that would actually tell us the market is broken. That would indicate some sort of price fixing or a cartel monopoly or some huge artificial constraint.
Oh, that makes total sense. So the fact that retailers are out there fiercely fighting for your dollar, the fact that they are forced to use these aggressive discounts to clear their shelves, that actually proves the gears of capitalism are working.
So it's working as intended. It's finding its natural equilibrium.
It's definitely messy, but yes, the market is just finding the floor.
So we shouldn't really panic as consumers. We should probably just enjoy the steep discounts while the retailers figure out their inventory issues.
Essentially, yes. This is a highly normal phase for any commoditized industry. We saw the exact same thing happen with solar panels a few years ago. We saw it with computer memory chips. Massive supply spikes, intense price compression, and then eventually long-term stability. We just aren't at the stability part yet for the plant itself.
I want to pivot to one really specific detail about where this data actually comes from. Valmis and Cannabis Deals US focus specifically on online retail pricing. Is that just because it's way easier to write a bot to scrape a website than it is to physically walk into 1,000 stores with a clipboard?
Ease of data collection is certainly a big part of it, sure, but Velmis argues there's a much deeper reason. Online is what he specifically calls the digital battlefield.
Ooh, dramatic. I like it.
It really is. But think about the massive difference in transparency. If you walk into a physical brick and mortar dispensary, you are essentially a captive audience.
Right.
You don't know that the guy 3 blocks away is selling the exact same brand of gummies for $10 less. The friction to leave that store, get back in your car, and go check the other guy is just too high. You're already there, you just buy it.
Yeah, exactly. I'm not going to drive 20 minutes across town just to price check a bag of edibles. I'm already at the counter, have shown my ID to the security guard, I'm just buying the gummies.
Exactly. But online, the friction is absolute zero. You can open 5 different dispensary tabs in 10 seconds. You have perfect information at your fingertips.
That makes sense.
And this total transparency forces the retailers to be honest, or at least significantly more competitive with their pricing strategies. They can't just hide behind geography anymore.
So the online prices are almost like the truest version of the market price.
Think of it as the canary in the coal mine. Online pricing acts as an incredibly accurate early signal for broader market trends. What happens online today, those 55% surgical discounts, that intense structural pressure, will almost certainly bleed into the physical retail reality very soon. If you really want to know where the market is going, don't look at the physical shelf, look at the browser.
It's really interesting to just sit back and think about how far this whole industry has come. I mean, 10 years ago, pricing data was basically asking your buddy Steve what he paid his guy.
Right. Market research was literally a text message.
And now, here in 2026, we have massive indexes. We have normalized scrape data. We have highly specialized analytical tools built by teams of data scientists.
That's actually Valmis's broader point. As the market finally matures, rigorous data-driven analysis is fully replacing gut feeling. We are moving away from that fragmented chaos we talked about at the very beginning and moving toward indexed reliability. It's becoming a real grown-up industry with real, trackable metrics.
Which is fantastic for us because it means we can actually understand what's going on without relying on industry rumors or marketing spin.
Absolutely. Knowledge is power, especially when you're the one actually spending the money.
So let's try to bring this all home. We've covered a lot of ground in this deep dive today. What are the big, actionable takeaways for the listener? We started with this whole idea of the price illusion.
And we found that in the 2026 cannabis market, that illusion is a highly critical economic tool. We learned that the list price is basically just marketing. It's a psychological anchor designed to protect the brand's perceived value and keep future options open for the retailer.
But the discount, that's the reality. That's the effective price.
Exactly. And we also learned not to be fooled by the boring stability of the hardware category.
Right. You have to distinguish the hull of the ship from the waves. Hardware is the stable hull. Consumables are the choppy water. If you're buying flour, you are actively swimming in a volatile ocean, where timing your purchase is absolutely everything.
And finally, we learned that this intense volatility isn't some catastrophic death spiral for the industry.
No, it's just the messy, completely necessary process of a market finding its footing in an environment where supply is vastly outpacing demand. It's
Right.
obviously painful for the businesses right now, but it's pretty great for you.
So here's the challenge for you, the listener.
Hmm.
Whether you are an investor looking closely at these companies or just a regular customer looking to restock for the weekends, start looking at the effective price. Completely ignore the sticker. Look at what people are actually paying at the register. That is your new superpower.
It really is the difference between being a passive manipulated consumer and being a highly informed market participant.
Before we go, I do want to leave you with one final thought, a bit of a provocation to chew on. We talked extensively today about how retailers are using these deep surgical discounts to avoid permanently lowering their prices. They're holding on to that $50 list price for dear life because they really don't want to reset consumer expectations.
They're basically fighting gravity.
But here is the real question. If these retailers have to rely on 30 to 55% discounts week after week, month after month, just to keep their inventory from rotting, at what point does the discount simply become the real price?
That is the ultimate question.
How long can you fake the sticker price before the market officially calls your bluff? Can they really keep this psychological charade up through 2027? Or are we going to see a massive structural price correction where the list prices finally crash down to meet reality?
I mean, if the supply glut continues like it is, reality always wins eventually. The list price can only be a fiction for so long before it breaks.
Definitely something for you to think about the next time you see that big red on sale sign in the window. Thanks for diving deep with us today.
Always a pleasure.
See you on the next one.